Hey traders, John Howell here. In this video we're going to have a look at why the 2016 to 2017 stock market crash is going to be much worse than the 2011, 2001 and 2008 stock market crash. So let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright traders, so we're looking at a chart right now and I wanted to share this with you, and I wanted you to become very alert of what is actually happening in our markets. And what is actually happening. Now we're obviously looking at this chart here, and you can see how this image here that I've got actually goes back to 2014. So you can see that we actually had this sort of move to the high side, and then we had this sort of, what was that, 2000 and around about 3, then it bottomed out, as you can see, and then we started to taking off. And then we started to form another top, 2008 bubble, and as you can see, that bubble only lasts about 2007 to 2009, so that lasted 2 years, as you can see. So you can see that's exactly what's happening in the markets right now, or should I say back then. But you can see what's happened now. You can see the movement, actually the steepness of the move generally equals the move on the downside. So if I bring if you see the steepness of that, you can see how steep that is, move to the high side. That generally equals big downside. So if I actually bring up, say, this chart here, and let me actually take this off the screen, and let me bring this down through here so you can see it. And let me just zoom this in here a bit more so you can see it a bit more. And I want to share this with you so you can actually see what I'm talking about. So this here, guys, actually let's just do this here. There we go. Let's just do that there. So you can see in this image here that you can see that this is obviously the SPX, and you can see this was the 1995. You can see the increase through here, and we've got on this image here. I found this image. It's a 68 degrees to the high side. That's the degrees. And then we had the obviously the tech boom and then the tech bust. And then we had from 2003 to 2007. You see that was the 60 degrees, and you can see how long it took. You can see we actually had a big drop down through there. But you can see that from here moving to the high side, we had 70 degrees. But what's happened since 2013? I was actually talking to a friend about this on the weekend. Now what's happened since 2013 to now? We've had an 80-degree move to the high side. That equals definitely big movement. And you can just look here. I'm just looking at some images now, and you can see this image here represents obviously the Shanghai index. And is that going to fix up? Is that going to get better there? No, it's not. Okay, so you can see that was the Shanghai index. I'm just looking through these images now to show you. So this image here represents exactly what happened with the Shanghai index before 2007. You can see that there. Now you can see. If I go China stock market bubble, let's go 2015 and type in that. Let's see what we can actually see here. So we can see that the stock market crashed. Let's actually just go back one, and we'll go to, say, this one here, and this one here represents a good screenshot. Even though it's a bit blurry, I want you to just bear with me now. You can see this here goes down to this 2007. This is the 2007. You can see the 2000 and the move up to the high side. And you can see exactly what here. Again, it's a bit blurry, but what we have here is this. This is the 2007, 2008 here. Not much movement there. Okay, so this here, this red line obviously represents the S&P 500. So you can see what happened at this here was the market 2007, 2008, and then we had the 2008 obviously Shanghai index collapse. But I want to show you the alright, this is exactly what I want. I just brought my charting software up there to show you the Shanghai index and to show you what I'm talking about when it comes to bubbles. So you can see on the Shanghai index, if I squeeze this up, you can see what happened here back in 2008. Okay, you can see I've noticed by studying this, especially the last couple of months, that the bubbles are very clearly on the charts. You can see this ran up, little sideways, ran up, little sideways, ran up. And then you can see here we started having a decent pullback, and you can see that decent pullback. And if I just actually zoom in on that there, let me see if I can zoom in on that there. So I want to show you this here. We can see that, you know, the market goes through buyers and sellers. So if I go to, say, let's go line, okay, and you can see the market runs up and has this sort of weak selling period, and it runs up and has a little bit of weak selling period, and then it runs up and has this big strong selling period. Notice how that strong selling period, we had this strong buyers, weak sellers, strong buyers, weak sellers, strong buyers, strong sellers, now weaker buyers than before, and then that's when it changed. Can you see how that's where the whole thing changed through there, and then obviously the stock market crash happened. But if you look back to what we see now, look what's happened through here, right? You can actually see that the degree of the movement on the high side, the market runs up like that. You can see how from the market just had a little move to the high side and then had a big shoot up. We're talking week. This is a weekly chart here, by the way. 1, 2, 3, 4, probably about a month and a half or so of sideways movement, and then it took off again like that. You can see the radical movement of that when the market's going up like that, and you can see how that is actually, it's a sign that the market's going to move down. Now, if I bring up, say, let's do this here. Let's go down. Let's bring up the Dow Jones, and let's just take everything off the screen now, and let's see if I can bring up enough data on my chart. Alright, so let's actually go to monthly chart. Let me see if I can see it a bit better on the monthly chart. Alright, there we go. And this is what I wanted to share with you guys. And I wanted to share this with you. You can really see a bubble on the chart. And the reason why you can really see, you can just see a bubble on a chart, right? So if you look at, say, this US market here, you can see this market ran up through here, had a pullback, and then we had this big run up through here. Now that was into the 2000, and then we actually went sideways for basically 2 years. And then we started to really start hammering to the downside through there. Market went sideways, and then we had this big, you can see this big run, and that was from 2005 to 2007, and then we obviously had the big crash through there. But as you can see on this chart, that the market ran up, went down, ran up, and it was acting normal, right? We're having nice flow of pullbacks, and then as you can see from this point here to this point here, it's just straight up. It's just absolutely just straight up. So guys, we are definitely, without a doubt, to me, getting down to the $14,000 level this year. That is a target for me, guys, and I'll tell you right now, that is likely. That is, to me, it has a really good chance of it happening through there. So to me, I have a target, and we're talking like a high 90% success rate of it getting there this year. Now that might happen over the next 6 months. Now, I'm getting myself positioned to profit from that. You better believe it. So I'm timing my in on the daily charts and so on and so forth. But you can see by looking at what we call the bubbles in the market, you can see exactly how they work. Okay, especially with the Shanghai index and obviously the monthly chart. So for people that say we're not in a bubble, the charts tell us when we're in a bubble. Right, the charts tell us we're in a bubble, and the charts tell us when things are starting to get a bit wonky, right? I mean, it looks like the end of the bubble is happening. How's that happen? Well, we start to get lower peaks. We start to get lower peaks and lower troughs. We don't continue to get new highs. We start to get a bit of sideways movement, and then suddenly what happens is the market starts to come down. Right? Is here you can see here we start to get a high, and we form lower peaks and lower troughs, and the market comes down. What's happening here? We're starting to form lower peaks and also lower troughs. So to me, guys, down, the prices are down to at least 14, even down to the 13,000 level I see on the Dow Jones coming at least for the first quarter of this year. Hey, it's John Howell here, and thanks so much for watching my video. You see, I'm putting out daily videos and education on helping you learning the art of successful trading. So click on the subscribe button to keep up to date with every video I do. Also, check out my story video, $250,000 in debt, cancer, overweight, family passing away, lived on the streets, and more, and how I overcome it and now thriving through my life. This is here to motivate you, so click on that image to watch my video. And lastly, if you're struggling with your trading, then you need to see my latest webinar where I'm sharing with you an amazing strategy that allows you to generate an income without getting the direction right. So click on that image on this page to register for my next free webinar. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.